Well, have you filed your taxes yet? I'm asking because there's 55 days left in the official tax season. That's right, 55. The deadline this year is April the 18th. You either need to get it in by then or you need to file an extension by that time. Today we are answering your tax-related questions. We have Ryan Dodson with Liberty Tax Services and Kevin Robinson from Robinson Tax and Accounting Services here today. These are your experts. You get to ask them your tax-related question. They're going to answer it for you on the spot. So here's how you do it. You text that question 336-379-5775. Text in that question. All right, let's talk about refunds. Because if you're getting money back, you want to know that you're getting money back. So, Kevin, what are you seeing when it comes to refunds?
Well, I think the refunds are not as big this year, Tanya, and one of the main reasons is for people that are non-itemized or that have been taking extra deduction for charitable contributions the past 2 years no longer get that. Also, no more stimulus payment on the return through recovery rebate credit, and the child credits have dropped down to prior COVID levels. So all that kind of together has spelled lower refund amounts for people this year.
All right, we've actually got kind of a graphic that shows why people may be getting like those smaller refunds. So I wanted folks to be able to see that graphic and see why they're going to be getting some of those smaller refunds that you were just talking about. First and foremost is that child tax credit, because it was what, $3,000 to $3,500 last year. This year it's only $2,000. Also on the graphic that we're about to show you that talks about why you're getting possibly a smaller refund back this year is that last year you had the charitable contributions where you were able to write off about $300 per person for charitable contributions, and that is not happening this year. So that is a change between tax year 2022 to tax year 2023. So we want to be able to make sure that you knew that for sure. All right. Hey, Ryan, this is what I want to know about refunds. How quick are they coming?
Hey, Tanya, this year they've started there in full. There were some refunds that the government, of course, couldn't send out till February 15th, but now that we're past that date, refunds are coming fairly quickly. It's great when we file a customer's tax return and the next thing in a few days they're like, hey, wow, my refund is here already, which is great. But that's just the federal one. The state, not quite yet, but hey, the good news is that the federal refunds are coming.
All right, and that is pretty common, isn't it, Kevin, where the federal refunds are coming very quickly and the state is usually a couple months behind?
That's a good point, Tanya, and I would echo Ryan. I've had a lot of my clients ecstatic get refunds in 4 or 5 days federal this year, and they are ecstatic. The state typically has more ID protection measures in place, and they just tend to lag behind the federal overall. Sometimes people say, when am I getting my state refund? And I say, when it hits your bank account. That's about the best answer I could give.
All right. Ryan, let's talk about this. Let's talk about cryptocurrency. For the first time, there is now a section on the 1040 form. You're going to see it whether you do it by paper or whether you do it online with software. And it's going to ask you about cryptocurrency. It actually says digital assets. So what is this?
So, Tanya, this is just the IRS trying to make sure that they capture all taxable transactions, whatever they may be. So you're going to see a question on there. It's going to ask, did you receive a digital asset or cryptocurrency as a reward or an award or payment for property? Like if you provided some services or you sold something for that? Did you sell any? Did you exchange any? Did you otherwise dispose of it? Because all of those could cause a taxable transaction, and the IRS wants to make sure that they're capturing all of those on everyone's tax returns to make sure there's no tax gap.
Okay, so if you got cryptocurrency in any way, shape, or form last year, but you didn't sell it, all you have to do is check the yes box and you just leave it alone. But if you did sell it, then you're going to have to fill out some other forms for sure, because that is going to be included as income. All right, we've got a couple of text questions already coming in. Kevin, this person says, my wife died in 2022. Do I still file as married?
Yes, they get the benefit, Tanya, of filing as married surviving spouse. So they do get the benefit of the extra standard deduction, double for married filing jointly with the wife dying or spouse in 2022. Yes.
Okay, but that is not the same like if your child turns 18 at the end of the year, like December 31st. They've been 17 all year long. They turn 18 on December 31st. You cannot claim them as a dependent that way. Is that right, Ryan?
Well, if they're in, well, it all depends. And that's the great answer with taxes. With taxes, in general, look, if they're 18 years old and they're out on their own and they turned 18 on the last day of the year, then guess what? You can't claim them on your tax return, right? However, there are of course exceptions to every single rule, and one of them is that were they a full-time student during the year, at least 5 months. Well, odds are they were a senior in high school during that year, so you would qualify for that exception. And that's the great thing with taxes, that there's always exceptions to the rule. And in this one, yeah, you could, but yeah, the last day of the year does matter.
Which is why sometimes it really does help to have someone who knows the ins and the outs of all of the tax laws instead of trying to figure it all out on your own. Kevin, this person's asking, I've owned my home for 40 years. If I sell it, do I have to claim that money as income?
Well, since they've owned it for 40 years and lived there for 40 years, if they sell it, they have obviously met the 2 out of the last 5-year rule. So if they're filing jointly, they can exclude up to $500,000 of gain on the sale of the house. And typically most people will meet that. They may get a 1099-S from the attorney's office for selling it, but we show it as a wash on the return. So no, they should not in general have to pay tax on it.
Oh, that is interesting. I just figured that you would have to. So this is cool. I'm glad we get to do these Q&As because we all learn a little something.